I wanted to give you an opportunity. You wanted to talk about a few of the things that have been happening and going on that you've been seeing. I wanted to give you an opportunity to sort of share some of your insights, as it were.
Yeah, I think there's going to be a bit of a crossover. I mean, what we've seen is certainly in the risk area, we've seen the VAR thresholds breached, and that's been a problem with post risk reporting, but also the future anti-risk modelling, taking into account the events of the last sort of 6 weeks to 3 months, is going to be quite difficult. Black swan events, 40 standard deviation events tend to take their own flavour, and it's always difficult to judge the next shock in the market. But very much as you said, Roger, what we've been doing is huge amounts of ad hoc reporting. We saw in our more riskier assets some very sharp drops up until about the 20th, 21st, 22nd of March. Managers, as you would expect, and you know the environment, would be, were wanting to see what the numbers were. And then we saw some sort of recovery from the 22nd, 23rd of March, roughly to the end of March, to make some of the Q1 and the March month-end numbers slightly better. And then we saw a sort of further dip in the sort of second and third week of April. So it's really been a lot of ad hoc work, but I think teams have coped really well with that, as Matt also alluded to. The liquidity modelling and the liquidity reporting has been a challenge, and also in our attribution numbers we've seen lots of issues around spread management, and trying to factor that into your attribution model has been contentious with some people, seeing that perhaps come through as a selection effect, people wanting to see that itemised as a separate factor, when of course you're working off Prism or FactSet. That's not going to happen without you doing some sort of manual override, which again takes a lot of time, and again is that manual input into the systems. But people generally have coped well. It's good that you've been getting monitors. Some of the anecdotal evidence I've been receiving is that front office have been getting their monitors, but the back office or middle office, or however you like to classify performance, haven't been quite getting the software support that they would like to receive. I don't know what people think on that, but yeah, risk has been a tough area, and some aspects of attribution have been a challenge as well. As I said, people wanting to itemise out spread and liquidity has been something we've had to push back on sometimes, just purely through the pressures of time. So I don't know what you chaps think of that. The parametric models are under incredible threat, and oil is probably a great example of doing that. You're looking at a situation where not only have you got this extreme event happening with industrial production in China and US, the two world's biggest economies, basically frozen at the moment. You've also got the push for renewables and other energy sources, and this is likely to push that on the agenda even more so. And then you've had the political standoff between Russia and Saudi Arabia as respect to oil, also having an impact on the price. All this is really difficult to model on a parametric model. VAR almost becomes sort of not searching for the right word, but it's superfluous really in that kind of dynamic. These models tend to work in a more sedate environment, but have been proven in the past to be less effective. As I said, we're trying to model around future macroeconomic and political dynamics, and that's always difficult to call going forward. Very much so. We've seen it in the FX space as well. Something I've been managing within my own business is trying to deal with the whole oil crisis, and the effect on petro and oil currencies has been very difficult to see. We've seen almost contradictory kind of events happening. We've seen Australia and New Zealand that are oil dependent, you know, diminishing in value when you think at a time of reducing oil prices, that they would actually appreciate. But there's other factors going on as well with that. We've seen the Canadian dollar depreciate, and that's fairly to be expected. Japan, massive importer of oil, and we've seen that appreciate, and we've seen the risk on and risk off factors around FX as well. So yeah, parametric modelling, very difficult.